Hello everyone. This is the pre-market report video for today, 2nd September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Indian rupee fell to another all-time low value near 88.3 rupees per US dollar. And if you see from November 2024, when Trump was elected as president, the rupee has depreciated by approximately 4.2% and it is the weakest of the all emerging Asian market. I mean, Vietnam and Indonesia came closer and so far they also fell about 4%. On the other hand, Chinese currency is on par, whereas Malaysia and Thailand's currency appreciated. So, is it bad? In a way, yes, to some extent as our oil imports getting costlier, but at the same time, this offsetting the Trump tariff from 50% to 46%. In addition, as UK pound and euro value increased against the dollar about 7 to 8%, and hence on the positive side, it's giving some support to the export competitiveness for the Indian goods. So, I believe the controlled depreciation of Indian rupee is good for the present scenario, particularly for the Indian IT stocks. Hence, yesterday in combination of expecting more US Fed rate cut and more Indian rupee depreciation, IT sector was one of the major gainer which increased above 1.5%. Here, I like to highlight one important thing. I mean, all the Indian investors and including FII is having this doubt. Will this AI revolution eat away the Indian IT competitiveness? I believe the answer to that is no. Let me explain how. Indian IT companies are predominantly in the servicing business like tech support and security support. So all the companies in the world for sure will need the tech and security support forever. Hence, there is no doubt of having the business. But what will change is the AI integration. I mean, a year ago in any core or manufacturing company, if they have the problem in laptop or PC, they immediately ring the tech support. Now, instead of ringing them, most people getting the initial advice from the AI. So, from the person's employment perspective, it's bad, not good. But from the stock market perspective, in the long run, I believe this might increase the IT company's profit margin. Here, I guess in future, less number of people will be employed in the servicing business, but for the company, business existence is intact and also already I'm seeing that has been happening. And also I found this, in order to manage the already employed people, Indian IT companies are already shifting the people from IT servicing to like engineering consultancy. Here, please don't curse me from moral side. I'm simply trying to explain from the stock market perspective. In conclusion, I believe our Indian IT business is safe for a while. But disclaimer, anything could happen in the future and I can be completely wrong. Anyway, back to the yesterday's Indian market. At 10:30 am, S&P Global released the India's manufacturing PMI data for August month. If anyone fancy reading about it, please have a go. I will attach the link in the pinned comment. I mean, I don't want to go too much in detail since that will make the video bigger, but like to highlight some. Because of this US tariff uncertainty, as expected, the international export order growth was weakest in the last 5 months. However, on the contrary, there was a strong domestic demand which kept the factory's order book to grow in the same growth rate as July month, which was the fastest in the last 5 months. So, India's manufacturing PMI data for August month came as 59.3, which is the fastest expansion in the last 17 years. I mean, last time Indian manufacturing sector grown at this pace was all the way back to the start of 2008, which was before global financial crisis. This good manufacturing PMI data, good GDP growth rate data, which we discussed in the last video, Bajaj Auto August month sales data, and GST Council meeting related optimism all made the Nifty to snap its 3-day negative closing and increased near 200 points. Sector-wise, because of Bajaj auto sector was the major gainer, was up near 3% and 14 out of 16 major sectors closed positive. Overall, the advanced decline ratio was 3:1, meaning for every one listed stock decline, 3 stocks advanced. Hence, yesterday Indian market had a very good day. Then coming to US, their market was on holiday. However, their future market was open and it was mild positive due to the rate cut expectation related optimism on the coming September 17th FOMC meeting. In addition, on the more global momentum positive side, Evercore ISI, one of the reputed investment researcher, released the report that they're expecting S&P 500 to increase furthermore like 20% by 2026. Other than that, it's just Trump made another social media post like how India is practicing unfair trade practice with US kind of. If required, please pause and have a look. I think he's now obsessed with India. Let's see who is going to cave who, Modi or Trump. Anyway, no Indian ADR. Gift Nifty case, last night it increased to about 24,800 mark, but early morning today it dropped and traded at 24,745. Considering the decent 120 points premium to spot market, it's indicating the flat opening. Then coming to new Indian market related info. Yesterday in the aftermarket hours, auto sales data for August month was released, and because people are waiting for the GST reform to be effective, year over year the sales was dropped by around 8%. If required, please pause and have a look. This is the top 5 manufacturers sales data for the August month compared to a year ago. Hence, for the second day in a row, we could expect the auto sector to be on focus. Second, I don't know its influence on the market, but worth to know. Yesterday, SEBI made an announcement that they are increasing net intraday trading limit to 5,000 crore rupees and gross intraday position to 10,000 crore rupees. Whereas earlier it was around just 1,500 crore rupees only. And this new intraday limit will be effective from October 1st. As I said earlier, I don't know its influence, but worth to know. Then third, compared to year ago, NMDC's iron ore output increased 10% and the August sales increased 8%. So we could say NMDC stock to be on focus today. As a summary, global momentum is good on the expectation of US rate cut. In addition, Indian macros, whatever released in the last 2 days, such as current account deficit, GDP growth number and the manufacturing PMI, all were in favor of Indian market. However, Trump is not in favor of India, so FII is also not in favor. Even yesterday in the cash market, FII net sold for 1,400 crore rupees, whereas DIS net bought for 4,350 crore rupees. Participant wise, in the index options, all the subgroup reduced their respective stance and the open interest was led by 47% new put options and 4% new call option addition. Then stance wise, FII from above net 9%, they reduced it to net 6.6% of the open interest on the bearish side. Similarly, proprietary traders from net 6.6% reduced it to net 4.15% but still favoring the bearish side. On the other hand, client or retail traders from net 16.6% reduced it to net 11.2% on the bullish side. In case of index future, if required, please pause and have a look. Overall, FII and proprietary traders still they positioned for downside breakout, while client or retail traders expecting the market to go up. Moving on, as per stock open interest, ITC, Divi's Lab, Aurobindo Pharma, Reliance Industries, Alchem Lab, L&T and HDFC Bank are some of the 7 stocks that got an increase in open interest along with a negative close indicating the short build-up. On the other hand, Amber Industries, Nuvama, RBL Bank, Dixon Tech, Torrent Power, Ashok Leyland and Indian Bank are some of the 123 stocks that got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, in the afternoon at 2:30 p.m., Euro area's consumer inflation for the August month scheduled to release, and in the night for US, their manufacturing PMI data and Atlanta Fed GDP growth rate projection are some of the important things we need to keep an eye out today. Coming to technical, Nifty opened flat, however, it rebounded sharply after 3 days of correction and increased throughout the session, then closed above 24,600 mark. Thus, on the daily chart, Nifty formed a long bullish candle which negated the previous 6 consecutive sessions lower high and 3 consecutive sessions lower low formation, which is good. In addition, Nifty surpassed the 100 exponential moving average intraday, but it closed just below and it is still trading well below the 10, 20 and 50-day exponential moving average. Furthermore, RSI moved upward to 45.5 while MACD still showed a negative crossover indicating a potential shift in the momentum, but confirmation is awaited. Hence, as an overall, Nifty reached close to the 100 exponential moving average 24,630, which is crucial for a further upward move towards the 24,700 to 24,800 level. Sustaining above might push the Nifty towards 25,000 mark. However, a decisive fall below 24,420 level could intensify the selling towards August low 24,330 mark. In case of Bank Nifty, similar to Nifty, it also opened flat and bounced back after 5 days of selling pressure and defended the previous day's low, then closed above 54,000. Thus, on the daily chart, Bank Nifty formed a green candle even though it's still trading below 20, 50 and 100 day exponential average. On the more negative side, RSI is around 33 and MACD maintaining the bearishness, all indicating persistent weakness. Hence, going ahead, 54,300 to 54,400 zone will act as the crucial hurdle, and any sustainable move above the level of 54,400 will lead to 54,900 level. While on the downside, the zone of 53,600 to 53,500 will act as the important support. Regarding the options front, the maximum call option open was at 25,000 strike, followed by 24,800 and 24,700, with maximum new call option rating at 24,650 strike and then 24,800 and 24,750. On the put side, the maximum open was at 24,500 strike, followed by 24,600 and 24,000, with maximum new put option rating at 24,500 strike and then 24,600 and 24,550. Thus, from options data, it suggests that the key resistance is at 25,000 level with key support at 24,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.